What's up everyone, and welcome back to Explain the Charts. Today, on October 8th, 2025, we are taking a close look at one of the biggest names in the market, Amazon, ticker symbol Amazon. We'll start by breaking down the latest news and headlines swirling around the company, and then we'll dive deep into the charts to see what the price action is telling us. There's a lot of debate right now on whether Amazon is a value play or facing headwinds, so let's get into it. First, let's cover the news, because the sentiment is quite mixed, but leans bullish long-term. We're seeing positive signals from analysts, with firms like Goldman Sachs recently increasing their price targets, citing strong confidence in Amazon's growth potential, especially within the AI sector. This ties into a major theme. Many analysts believe the market is underestimating future profit drivers like the re-acceleration of AWS, AI-driven efficiencies, and the high-margin advertising business. Morgan Stanley has even called Amazon its top pick, with a potential bull case target of $350. Another significant talking point is Amazon's valuation. Despite a massive 700% rally over the last decade, articles from sources like Benzinga and Morningstar are highlighting that Amazon stock is trading at a near-decade low in terms of its forward price-to-earnings ratio. This has sparked a serious debate about whether Amazon is transitioning from a high-growth stock to a value stock, potentially offering a rare buying opportunity for long-term investors. On the business development front, Amazon is not standing still. The company announced a major investment of over $1 billion in Belgium to expand its European footprint and is also growing its pharmacy services with in-store kiosks. These are long-term bullish catalysts for revenue diversification. However, it's not all positive news. Investors were disappointed by Amazon's forward guidance after its strong Q2 earnings report earlier this year. This lack of clarity on long-term AI strategy and weaker profit expectations caused a significant drop in the stock price after hours, a move we will clearly see on the charts. So we have this interesting conflict: strong long-term fundamentals and bullish analyst targets versus some near-term uncertainty that has recently weighed on the stock price. Now, let's pull up the daily chart and see how this news translates into price action. Looking at the bigger picture for 2025, we can see a very strong uptrend from the lows in April around $161, which peaked at the 52-week high of $242 in early February. After that, the stock entered a period of correction and consolidation. The most dramatic move is this massive gap down we saw at the beginning of August. The stock fell from a close around $234 on July 31st and opened near $217 the next day. This drop correlates directly with that disappointing forward guidance we just discussed, showing a clear reaction from the market. That price gap, roughly between $217 and $234, now represents a significant area of potential overhead resistance for any future rallies. Since that drop, the price has been in a clear downtrend, making a series of lower highs and lower lows through September. It found a bottom recently around the $216 mark and has been attempting to stabilize. The key support level to watch on this long-term view is that April low around $161, which would represent a major breakdown if breached. To the upside, the first major hurdle is getting back above the post-earnings gap, with the ultimate target being the $242 high. Let's zoom in on the action since that August earnings drop to get a clearer view. Here we can see the sharp sell-off and the subsequent downtrend through September, where the price fell from around $238 down to about $216. Over the last couple of weeks, the price action has tightened considerably. We've been consolidating mostly between $218 and $223. This tightening range suggests indecision in the market. It's a battle between the bulls who see the low valuation as a buying opportunity and the bears who are concerned about slowing growth and macroeconomic risks. The price is currently hovering right around a key pivot area of $220 to $222. A decisive break above this consolidation range could signal a short-term trend reversal, while a break below could indicate a continuation of the downtrend that started in September. Now let's switch to the 1-hour chart to analyze the very short-term picture. Over the past few days, we can see this consolidation even more clearly. The price action has been very choppy, swinging back and forth without a clear direction. Yesterday's trading range gives us our immediate support and resistance levels. We have support down at the low of $220.17. Resistance is at the high of $222.89. These are the critical levels for day traders to watch right now. A sustained move above $223 would be a small victory for the bulls, potentially opening the door to test resistance near $225. Conversely, a drop below the $220 support level would be bearish in the short term, suggesting sellers are taking control, and we could retest the recent lows around $216. Finally, a quick look at the 15-minute chart shows the intraday action. As you can see, the price is currently trading around $221.78. There is no strong momentum in either direction at this very moment. The price is essentially hovering in the middle of yesterday's range, reinforcing that idea of market indecision as we await a catalyst. This is what we call a wait-and-see market on the intraday time frame. Okay, let's go back to the daily chart to recap and talk about what to look for going forward. To summarize the key price levels, we have major long-term support at the $161 low. Closer support levels are at the recent low of $216 and the psychological level of $200. Immediate short-term support is at $220. For resistance, the immediate hurdle is the top of the current range around $223. Above that, we have resistance from the September highs around $235, followed by the big gap fill area, and then the all-time high of $242. So, what's our unbiased prediction? The bullish case, which I'd give a 60% probability in the medium term, is supported by the historically low valuation and very strong analyst targets. If the broader market remains stable, a breakout above the $223 to $225 resistance zone could confirm a short-term bottom is in, leading to a gradual move towards the $235 level. Positive news on AI monetization or AWS growth in the next earnings report would reinforce this scenario. The bearish case, with a 40% probability, hinges on macroeconomic fears or company-specific slowing growth. A failure to hold the $216 support level would be a significant warning sign, likely leading to a test of the $200 psychological level. This would be reinforced by another weak earnings report or a broader tech sector sell-off. The most important thing to watch for is the upcoming earnings report for Q3 2025. That will provide the clarity on growth and AI strategy that the market is desperately seeking. Until then, expect the price to remain sensitive to these key short-term support and resistance levels. And that wraps up our analysis on Amazon. Remember, this video is for informational purposes only and is not financial advice. Always do your own research and make investment decisions based on your own risk tolerance.